Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. Today, we're taking a look at the Nasdaq. Now, initially, it looked like we were going to have a pretty strong bullish day, but, well, they kind of kicked that one off back down to the downside pretty aggressively. Now, looking at Friday obviously had a lot of stuff going on. We had a little bit of a pullback towards the end of the day, and then today we gap up higher, and that gap up was met with an immediate buying pressure, right? Just snap right out of the gate. They couldn't fill the gap, closed right back on its highs, and this was across the board. Every indice had this exact same thing. The Nasdaq, the S&P, the Dow, the EMD, everything had that first bar closing smack on its highs, and that allows for what we call a first bar swing. And that's a type of trade that is a little bit lower probability. It doesn't work very frequently, but when it does, it's generally a really good risk reward, and it did work in this case all the way back up to a new high and through last month's close price at 54.3875 into last week's open at 54.41 3/4. So a nice pop higher there. Now, for a lot of traders, they don't like taking those lower probability, high reward trades, even though I think they're a phenomenal strategy. But instead, a lot of traders just like being right more than they're wrong. So they're going to wait. And they're going to wait for any kind of pullback. With this kind of rally, the buyers are likely going to try pretty much anywhere they can get their hands on, right? Whether it's a single candle pullback, a multiple candle pullback, a pullback back to the original entry point, doesn't matter. They're going to be scaling into this move to get another leg to the upside. So we have a buying opportunity here on the first pullback. They start dipping down towards that original entry point off of that first candle. They miss it, which is very important. Right? We're talking about the psychology of the move. What's the psychology of them missing that order? Well, traders who bought this and were maybe a little bit nervous on this congestion, they may have moved their stop to break even. And if they move their stop to break even and they weren't hit, that means that they are still in the market and they still have conviction to the upside. And as long as that is still true and we get a strong bull candle, you're likely going to get a good breakout. And that's what this one is right here. We get that nice strong bull candle closing back on its highs, back above the prior high of day, and rockets away. We push up to a new high and finish off the job. Now, at this point, one of two types of scenarios are likely to happen. We have a big blow-off candle at the highs and bad follow-through. This could be the top of the day, right? This could be exhaustion. The buyers took that move up and said, you know what? Good enough. This is what I was looking for. Get me out of the trade. And they start taking profit. Now, a lot of buyers aren't going to be 100% sure on that until we see some actual proof. A couple bear candles, that's not good enough, especially considering how weak all of these are. But then this shows up, right? And this is quite different. This is the biggest bear candle that we've seen all day. And also, if not the biggest candle, at least very close to the biggest candle that they've had all day, and it's to the bear side, breaking down after possible exhaustion from the buyers at the highs. So that's offering up the sellers to switch gears and push the market back down, knowing that if buyers didn't take their profit up here, now the buyers are stuck in the move. And that's not a situation that any buyer wants to be in after seeing this beautiful breakout to the upside. They're going to look to exit where they can. They get a pullback. They can't even make it back to the prior high of day before turning right back down again. And that's likely going to have all of the buyers running scared and turning back down. And also, if you look nice and close here, see what happened? Notice this went one tick above that bull candle right there. Likely a lot of buyers waited for that secondary bounce up. They bought above that bull candle, and now they are trapped as well. This is a huge trap, and that allows for the sellers to just free fall this market right back down to the lows. And that's what happened. Huge breakout to the downside. And we actually broke to a new low of day through the gap fill and just continued, right? Look at this bear candle, and then look at the follow through. The sellers are not done yet. The same reason that we wanted to buy this pullback all through here is the same reason that we want to sell everything inside of here, because that's what makes sense. So we're looking for the sellers to jump in and drive the market back down. We have a nice little pullback. The sellers try once, fails. We trap in buyers above the bull candle, turns right back down, and that allows the sellers to slam it down once again. So just a phenomenal day of psychology in terms of price action. All of those moves happen on the basis of mostly fear in today's scenario, or greed that turned into fear. But either way, it worked out beautifully. So that's going to do it for today. Hopefully you learned something. Hopefully you found it interesting, maybe a little bit entertaining, and we'll see you next time.